Today, we will talk about available-for-sale securities. An available-for-sale security is a debt or equity security purchased with the intent of selling before it reaches maturity or holding it for a long period should it not have a maturity date. Accounting standards necessitate that companies classify any investments in debt or equity securities when they are purchased as held to maturity, held for trading, or available for sale. Available-for-sale securities are reported at fair value. Changes in value between accounting periods are included in accumulated other comprehensive income in the equity section of the balance sheet. Available for sale is an accounting term used to describe and classify financial assets. It is a debt or equity security not classified as a held for trading or held to maturity security, the two other kinds of financial assets. AFS securities are non-strategic and can usually have a ready market price available. The gains and losses derived from an AFS security are not reflected in net income, unlike those from trading investments, but show up in the other comprehensive income (OCI) classification until they are sold. As mentioned above, there are three classifications of securities: available for sale, held for trading, and held to maturity securities. Held for trading securities are purchased and held primarily for sale in the short term. The purpose is to make a profit from the quick trade rather than the long-term investment. On the other end of the spectrum are held to maturity securities. These are debt instruments or equities that a firm plans on holding until their maturity dates. Available for sale, or AFS, is the catch-all category that falls in the middle. It is inclusive of securities, both debt and equity, that the company plans on holding for a while but could also be sold. If a company purchases available-for-sale securities with cash for $100,000, it records a credit to cash and a debit to available-for-sale securities for $100,000. If the value of the securities declines to $50,000 by the next reporting period, the investment must be written down to reflect the change in the fair market value of the security. This decrease in value is recorded as a credit of $50,000 to the available-for-sale security and a debit to other comprehensive income. Available-for-sale securities can be classified as current assets if they are held for less than 1 year, which is the definition of a current asset. If they are to be held for more than a year, then they have to be classified as a long-term asset. Here are 4 key takeaways. 1. Available-for-sale securities, AFS, are debt or equity securities purchased with the intent of selling before they reach maturity. 2. Available-for-sale securities are reported at fair value. 3. Unrealized gains and losses are included in accumulated other comprehensive income within the equity section of the balance sheet. 4. Investments in debt or equity securities purchased must be classified as held to maturity, held for trading, or available for sale. Hope this would help. Thanks for watching.